Okay, well, let's stay with the theme of stocks. The S&P is off only a couple of points today, but it has had quite a week. The large cap index is up more than 5% this week, thanks to big profits from Goldman Sachs and JP Morgan, and also stronger than expected retail sales numbers. But the picture is not as rosy as it would appear, with corporate insiders selling shares and also option traders boosting bets that the S&P will fall. Bloomberg reporter Eric Martin has been tracking these moves. And Eric, what's going on here?
What we're seeing, Betty, is investors describing this as taking 2 steps forward and 1 step back. In terms of the U-shaped recovery everyone's discussing, doesn't just mean a slow recovery, but it means we're going to get positive data, and we're also going to get at times negative data. So it's not going to be one direction, which we've been seeing for the past year or so in terms of basically 45-degree downward sloping economy. But it doesn't mean that every report that comes out is going to be rosy. At the same time that we see Americans raising their savings rate, we're also seeing retail sales beating estimates.
Right.
So it's really a mixed bag, and it depends on which reports investors are focusing on.
Well, are investors, though, ignoring traditional warning signals or no?
The warning signals are part of that mixed bag. You know, we've seen these options bets where investors are paying more for protection to the downside than to the upside. We're also seeing insiders who are selling at the fastest pace in 2 years midway through June. And for a while, that did seem to dictate where the market was going. We fell about 7% from the June 12th high through July 10th. But this week, in terms of Goldman Sachs coming out, Intel coming out with earnings. We've had J&J, just so many earnings that are beating estimates. It's really giving JP Morgan this morning is giving a big upbeat tone to this market.
Right. Now, between those two, though, who should you be paying more attention to? The insiders selling their shares or the options market?
The options market is probably more important at this point. There's a lockup for most insiders in what they can do around earnings season. So the lockup goes into effect at the end of the second quarter. And we've only seen a few earnings reports starting to come out with Alcoa last week and those that we've seen this week. So insiders really can't act on that information at this point. But it's something to see how they react in the days after their companies report earnings and what they do. But the options are something that everyone is really looking at just because there still is a feeling, talking to Pete Sorrentino of Huntington Asset Management, there still is a feeling that we may be in a trading range, that we may not necessarily break through or go much farther than the June 12th high, but we may still have some retracement left.
Even though we've had some pretty big beats on the earnings front, though.
Exactly. The tone that Goldman Sachs set this week, also some bullish notes from Meredith Whitney, who was among the first analysts coming out and predicting the problems that we had last year. That really was a turning point for this market. And it's been the past 3 days, some churning today in the market. But the past 3 days, we saw something like a 6% rally, which has really been having an effect.
Yeah, it has been indeed. Eric, though, I mean, in your sense, looking at the insider selling and look at the options bets, how long does this bearish sentiment perhaps have to go? Like, what are the legs on it?
It really could be through the end of this year. Talking to investors, people are looking for unemployment to continue rising to top 10%. The economy getting about 2/3 of its juice from employment and from jobs and spending by consumers. So that's going to be a big headwind. But there are these these kind of glimmers of what people have been talking about, discussing a lot. These green shoots that are making a difference.
That's right, green shoots. We've been talking a lot about that. People getting tired of that phrase, though. But it's certainly something to watch. Okay, Eric Martin, thank you so much. Always great to see you. Bloomberg's Eric Martin talking about the markets.